morning traders, welcome to the weekly Elliott Wave Street update. I'm Juan Maldonado and it's a pleasure to start the week with some of our wave counts. Wow, last Friday was crazy on these markets. With a big surprise on the employment data in the US, we have a lot of significant movements in the markets. I was expecting actually something different. Last week on the euro, I was looking for a leg down, a corrective wave around this area, and then another move down. So this is the expected, this is the actual, and the other part is how we are going to react to the change of a structure in the market. So usually, I like to, when I'm in a corrective wave, let's say I'm thinking this is the wave 1, I'm looking for the wave 2, I look for a 3-wave sequence where the last leg is losing momentum. Because if it's gaining momentum, I'm not going to trade it. But if it's losing momentum and the price clearly fails and reverse, I'm going short. But on the other hand, in a different scenario, if I'm having this price action, I'm not going to go against this monster. And this is the case on the euro. After the employment data, the euro started to go higher, so I have to update the wave count. However, I never went short. But right now, I'm looking, now that with this huge addition of momentum and with the weak US job market, it's telling that the Fed or the US government will need to pump more money into the market. And if they start printing more money, the dollar is likely to go lower. And I'm looking then for this leg up to complete the wave A, a 3-wave sequence, and then a 1, 2, 3, 4, 5 sequence for the wave X. This is likely to happen during this week. Once we're here, if we have a proper divergence market, if the market is tired, there could be interesting to find a short trade on the euro. And let's have a look at the dollar and the bond markets, and then we have a look at the S&P. On the dollar, after the employment data, we have a huge move down. So of course the opposite as the euro dollar. And the dollar continue going lower today during the New York Open. It seems that we need to have the price going up and then the move down. It's like the parachute here. So this guy is falling from the sky and it opens the parachute on the wave 4, and that starts slowing down the trend on the dollar, and the institutional guys are going to start an accumulation that usually looks like an ending diagonal, something like this here, with 3 lows, 1, 2, 3, and that could be the end of this market cycle, and we can have a bounce back to the 91, 92 area, depending on how deep the move is going to be. But for now, clearly down, we are likely to extend further the wave 3, that's possible, until we see the wave 4. But there is something that can slow down, at least slow down, the dollar, and it's the bond market. Look at this tail on the bond market. Wow, that's incredible. So it was like the bond traders were, a big surprise on the jobs on Friday. Let's buy, let's buy, let's buy, let's buy. Let's buy. No, that's wrong. The market, the S&P is going up. No, that's wrong. Let's sell. And they start selling, right? It was something like that. So it seems that the corrective wave after this aggressive move on the bond market finished, and we are ready to go down back to the 132. And if the bond market starts going down, we are going to see an increase on the interest rate on the yield that could slow down or maybe reverse the bearish trend on the US dollar. Let's have a look at the fantastic S&P. This has been doing great from last week. I started to validate the end of the move. Here was a beautiful validation. Here was difficult to find the end of the market because the S&P was going down strongly. But once we have the big move up and the 3-wave sequence, that's a beautiful entry because we have a failure, we have a market failure, we have the price reversing, we have the price adding momentum, minimum target here, and here we have a corrective. I'm looking for another move up. And once we have the new move up after the wave 4, it could start the corrective. This corrective wave, we need to have the completion of wave 1 because I don't know if the wave 5 is going to extend further. Maybe it could extend to the 4,300 area, for example. It's possible. But if it's just a regular wave 5, it could go to the 4,250 around that area. And in that case, we can have a 50% corrective wave of the previous move. It could go back to the 4,200, 4,180 area before we have the next move up. So it's expensive, the S&P, but I believe this week we need to have one more before a corrective wave. I want to invite you to ElliottWaveStreet.com because now on the membership I have the new course that is included in the membership, that is the Members Academy, with an Elliott Wave crash course that is in progress. I already have 2 lessons there. I'm adding 1 lesson per week, and I have more lessons in risk management, in how to trade the waves, and a lot of stuff that you are going to love it. So to start your membership, click on the membership tab and pick your plan. All the plans comes with the new Members Academy, so you can have the live market analysis every day, plus the educational part on how to use the wave counts. And we have the Forex, the stocks, and the full access. You can pick your plan and get immediate access to our membership with videos, with charts, with access to the Telegram group. So you're going to have a lot of things inside the membership. All right, traders, thank you very much for watching this analysis. I'll see you on the membership. Have a fantastic week. Take care. Bye-bye.